com.
Welcome back to Fast Money. Check out shares of Slack jumping to brand new all-time closing highs in today's rally. The company reporting results tomorrow. Options traders are betting the stock will work its way even higher. Mike Coe's got the action. Mike.
Hi, Melissa. So calls out traded puts actually by about 5-1 for the last 20 days on average. Actually, it did so again today. And right now, the options market is implying a move of just under 12% after they report earnings. Now, the biggest trade that we saw today was a big one and an interesting one. Somebody sold 7,000 of the January 2022 45 strike calls for just under $8.90 a piece, and then bought 406,000 shares of stock for just under $40, close to $39. Basically, this is a trade that's betting on volatility to compress. It's going to make the most money if the stock goes up to that $45 strike price by the January 2022 expiration, more than a year and a half away. However, this will also make money if the stock drifts higher and volatility comes in. And I think that's what this trader is betting on. Premiums are very high, and I think they think that things are going to begin to normalize there. And they like being long the stock, apparently.
All right. Tim, you know, it seems like the key here to this trade is that it's a very long time frame.
It's a long time frame, and that's clearly the secular trend here. So, I think if you look at what we've seen in the entire space and work from home, et cetera, I think valuations are difficult to stomach. The momentum in these trades makes it very clear there's still a pathway.
Yeah. Steve?
Yeah, the way I look at this thing is you go back to the IPO price, which was basically 26, traded straight up to 42-ish. It's taken a year to get it back to this level right now, but it is at the epicenter of what people are reaching for. So when we opened up the show and we talked about value and tech will always have a sweet spot for the masses. I think this one, although it's taken a year to get back to that level, seems like it's still in the bullseye to attract new investment dollars.
All right. Mike Coe, thanks for the action. And be sure to tune into the full show. That's Friday, 5:30 p.m. Eastern Time. Up next, the one beauty stock getting glammed up today on reports that it's in talks with Kim Kardashian. We will reveal the name when Fast Money returns. Welcome back to Fast Money. Coty getting a pop today as it looks to deepen its ties with the Kardashian clan. The company saying it is in talks with Kim Kardashian West, to produce a cosmetics line. While it provided no details about a potential deal, the news comes after Coty bought a majority stake in Kylie Cosmetics, created by Kylie Jenner, her sister, for $600 million. I don't know why, but I feel like I should go to Tim for this.
Look, collaboration with Kim Kardashian is certainly interesting. So, look, let's get back to Coty and let's get back to current and post-pandemic dynamic here for beauty. It's been pretty ugly. Coty went into this over-levered, so there's a turnaround plan that kind of got scuttled. The good news is that KKR stepped in, and there's a very competent, I think, someone that could navigate some of the moving pieces here. This is good news. This isn't great news. This doesn't solve the problem, and we don't know much about it. But two Kardashians is probably better than one.
Karen, beauty has always been looked at as the small luxury. You know, times are tough. You buy a lipstick or you buy a lotion, and it makes you feel better.
Right. I mean, I was wondering, was Kylie upset that Kim then did this? I don't know. I don't know if they're going to fight about it. I don't really know. But, you know, or she's like, hey, Coty overpays. You should do something with them also. I don't know. To Tim's point, you know, there's a lot of debt here. I'd rather be in an Ulta and, you know, sort of wait for traffic to come back, which it will at some point.
Time for the final trade. Let's go around the horn. Steve Grasso.
Spirit Airlines. So Save, I mentioned it the other night. I've been on this one for a while. The stock had doubled, and I spoke about it at $14. I thought it could double again. Stock was up 20% today. I think it's going to $28. Spirit, Save.
Tim.
Banks still have a way to go, and Citibank has underperformed the rest of the group. Citibank, mom and dad feel better.
Karen.
Yeah, I want to take some risk off the table from some of the, you know, things are opening up trade that's worked. So URI, out of the money calls, I'm going to sell some of those.
Guy.
FireEye, Melms.
All right. Thanks for watching Fast. We'll see you back here tomorrow at 5 for more Fast. Meantime, Mad Money with Jim Cramer starts right now.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Apparently, America wants to do what Americans do best. Shop, carouse, gamble, generally have a good time. When they're allowed to do those things, our country looks a lot more like the juggernaut it used to be. And so does the stock market. That's the only way to interpret the incredible pin action that we got today from ADP's incredible report. It's their national employment report, and it showed that private sector employment decreased by just 2.76 million jobs last month, when most economists were expecting something more like 9 million. That and some early positive data about the opening of restaurants, retailers, and casinos are how the Dow surged 527 points today. S&P jumped 1.36%. NASDAQ gained 0.78%. We're gaining back all our losses here, people. Now, you see this kind of animal spirits of the market coalescing with the pent-up demand from ravenous consumers, and you get the insane gains like we saw. By the way, taking us to the most overbought level, 11.1 on the S&P short-term oscillator since July 24th, 2009. Now, usually that'd be a frightening level. Remember, anything above 7. But do you know that anytime it's been this high, it's actually okay? We'll have to do more on that later this week. Look, I know there was a time, really not that long ago, when a month with 2.76 million job losses would have been considered horrifying. We'd be going full Pete Seeger. I dreamed I saw Joe Hill last night, alive as you and me. And we'd put mattresses on the roof of our car, Tom Joad style, because that's a grapes of wrath kind of number. Not now, though. See, today, we cheered when we saw that ADP report. Even though it could potentially be an aberration, a number that's too bullish, we'll find out for sure on Friday when we get the Labor Department's non-farm payroll report. On the other hand, it might not be an outlier. And if this ADP data is representative, it is huge. The biggest problem in this economy is unemployment. I can't think of anything more positive than the job market being in much better shape than we thought. No wonder we've seen a wholesale shift in what stocks people are buying and selling here. The V for victory economy is back in play, which means many will rotate out of the COVID stocks and head for greener pastures before they even see better numbers. Yep, we're looking at a classic Awaken America rotation. That's about a resurgence of shopping, chowing down, and the roar of big-time commerce. Think of it as a return to normalcy trade. And that's how you get everything from Nordstrom to Kohl's to Foot Locker roaring, along with the railroads like Norfolk Southern and Union Pacific, and the industrials like Cummins, Caterpillar, Honeywell, and even Boeing, which trades as though the 737 MAX is on the verge of being approved by the FAA. It's cheesecake time in America. That's right. It turns out that if you open it like Cheesecake Factory, they will come, which is why even that hallowed institution is crushing the numbers. Remember, some of these retailers were supposed to be out of business by now, and we're even skipping rent, as Cheesecake Factory did in April. Same for the cruise lines. Hey, nice save, Jay Powell. But almost no major corporation goes out of business in this happy year, aside from small businesses, which are hanging on by a thread here thanks to the pandemic. Remember that? And the looting that's happening in conjunction with the otherwise totally justified George Floyd protests. So what do you do here? First off, you have to know where the money's coming from to buy stocks. Bonds sold off hard today. Hey, who needs bonds when we're looking at a genuine economic recovery? Maybe even a V-shaped recovery that seems a lot more likely after today's terrific payroll data from ADP. Investors also dumped the drug stocks. They've been popular favorites, particularly the ones that have been boosted by their attempts to fight COVID-19, but also the anti-cancer plays, all right? Regeneron has both, and it got hammered mercilessly. And I think they're doing well. The major drug stocks either got pummeled or badly lagged the averages. They're too consistent for this market. Third gold's in the crosshairs. Well, remember, you don't need a safe haven if the economy's already coming out of what may be the shortest depression in history. We just did a negative piece on gold earlier this week. Thank you, Carly Garner. And it looks like she was right to be concerned. Fourth, you have to suspend the stay-at-home theme. Even if the work-from-home stocks are still working, they're two different things. People are still working remotely. But now they're allowed to go outside. Most places, they're not staying locked up, all cooped up inside all day. So people sold the video game stocks hard because now you're more likely to be out playing games and say, hey, Dave & Buster, an outfit that looks like it was on death's door a few weeks ago. You stop cooking. So even when Campbell's Soup reports a terrific number like they did this morning, nobody really cares. Hey, I don't know about you, but I am done doing the dishes. Done. The wiping, it's not done. It's like, you can't just put it in that thing, whatever that thing is. You got to wipe them down. Why? If the water comes down, no, you got to wipe them down. I'm sick of it. Anyway, the pantry stocks are suddenly going out of style, too, with the Wall Street Fashion Show. We'll learn more when we speak to B&G Foods. You know them as Green Giant later in the show. Sick of that stuff like no, very good stuff, very good stuff. And, of course, FAANG is out, although some of those stocks were able to rally today. Apple, for example, was boosted by Katie Huberty at Morgan Stanley. She's the axe in the name, and she says Apple's service revenues will be off the charts when the company reports. Smells like an upside surprise to me. No, you don't sell FAANG, but I'm giving you the lay of the land. And that's the essence of the rotation. So what's worth buying here? Okay, you need, first of all, easy compares, as we call it. Now, let's start with something like Stanley Black & Decker. Again, this is historical now. The toolmaker that this very morning put out a statement saying they expect organic revenue to decline 15 to 20% decline. Now, in absolute terms, that's horrendous, right? But a couple weeks ago, Stanley Black was talking about doing a 20 to 30% decline over the same period. In other words, this was a major positive driven by strong performance in tools, storage, and global security. So the stock jumps a quick 5%. With those businesses rebounding like crazy, it makes sense that we'd see record highs in Lowe's and Home Depot, as we did. Meanwhile, if people are shopping again, does that mean it's safe to go beyond individual retailers? Maybe put some money in some of the world's largest shopping mall owners? Bingo! Simon Properties, which I told you is good. SPG, it's got an 11.5% yield here, even after the stock rallied nearly $10 today. We know Simon's committed to maintaining that dividend, and if retail's coming back from the dead, then they should be able to cover it. They've given out $33 billion in dividends in the past. Oh, and who does better when people are out and about, maybe even thinking more positive? The banks! They can finally play catch-up, especially the ones with big brokerage businesses, thanks to the success of the Warner Music IPO today. Yeah, the stock exploded higher, showing you that brokers are trying to entice people back into the market, which is why that's exactly what to do at the beginning of the IPO. So you better get some Zoom info if you can. Well, it's tomorrow morning. All I can tell you is that at the beginning of a run of IPOs, the brokers just let you win. It's kind of like a casino where they're giving you the right cards. Plus, we love to gamble. Speaking of that, when opens for business, and what do we find out? Damn the plexiglass! Full bets ahead. The numbers look much better than expected. The whole group word on that news. Now, there's some legitimate worries here if you think about what's working today. If people are going out, shopping, mingling, that means they're gathering again, which puts us at risk of another COVID-19 outbreak, the scientists say. But with the worst hotspots contained, people just don't seem concerned about this pandemic. Also, keeping people inside in March or April is just a lot easier than keeping people inside in June. On top of that, it seems almost absurd that there could be so much shopping and house hunting during a pandemic when we've got protests and riots all over the country. But look at it another way. While 20 million people are on unemployment insurance, you still got a core group of employed people who are desperate to go out. Many of these people sold stocks, spent next to nothing for the next 3 months. As the market recovers, they want very much to return to normalcy. They're going to RH and buying furniture. The bottom line, I can't tell you what normalcy looks like in a country in terms of systemic racism or the coronavirus. But if there's one thing I know about America, it's that normalcy is shop until you drop. And today's action says that's exactly where we're headed. Andy in Florida. Andy!
Hey, Jim. I would like to talk about U.S. Steel. A few years ago, it traded in a range of $50 to $60. Recently, it hit an all-time low of $4.54. I bought options, played the bounce. Before earnings, it looked strong, and I know President Trump is pro-steel, and I know there are some shorts on there. I just don't know how much is on there.
Well, look, I don't want to trade. I don't want to trade the worst. I want to own the best, which is Nucor at 44. I see steel getting a little stronger. I want you to buy Nucor at 44. Let's go to Dan in California. Dan.
Jimmy Chill.
The chill man in the house.
Big sunny San Diego. Booyah.
Oh, I love San Diego. I love it. Nice beach there.
Hey, Jim,
Yeah.
Did you know that San Diego is the birthplace to one of the greatest Philadelphia Eagles of all time?
No, I did not know this. This is a quiz, and I don't know the answer.
6-time Pro Bowler,
Bill?
back when Pro Bowlers actually meant something. You still don't know.
Not Chuck, and
Number
not Bill.
21, Eric Allen.
Eric Allen.
Born and raised in
I
San
saw
Diego.
the touchdown. I saw
Yeah.
the run back. I saw the run back touchdown. I was there. I was there for the run back touchdown. That's 103 yards, you know.
Yes.
It was 103
You
yards.
wanna
I
know
can
something
actually
else,
do
Jimmy?
it right here. I can do 103 yards right here, and I can do it, and it'll be a half hour slower than he did it. How can I help?
Hey, one more thing about Eric Allen. The guy does not have a gold blazer in the closet. He's never been to Canton, Ohio.
Well, that's
We gotta do something
outrageous.
about that.
After this show's over, I'm going to rectify that. I'm going to put my N95 on. I'm going to do all the stuff that you need to get to Canton, and we'll get that fixed. How can I help you?
All right, buddy. I've taken all your advice, and I've profited very well from it over the years, especially with the FANG stocks and the COVID stocks lately. But
Now we're
I'm
in the
middle-aged.
anti-COVID
I think
stocks,
it's
but go
time
ahead.
to ring the register.
All right.
So I'm thinking about cashing out a little bit and buying a stock that actually reminds me of number 21, Eric Allen. This stock pays a nice dividend, but it gets very little respect. It's down over 20% this year from its high. I'm talking about another California company, Sempra Energy.
Jeff Martin. Jeff Martin's got game. I like that. He knows I'm an Eagles fan. He feels for me until we won the Super Bowl. I think you're right. I think that's a good stock. Remember, now we're in the stocks that do better when the COVID epidemic's done. But I think that's a great company. It's a great company. And Jeff's doing what's right with trying to hold back a little bit on that LNG plan. We don't want all that money spent. All right. We're looking at a classic Awaken America rotation. This market is proof that America wants to do what Americans do best. And even though it's overbought, The records show it can go higher. On Mad Money tonight, can Zoom continue to zoom higher after earnings? I'm going to give you my take on the company's potential trajectory. Then, it's a new way for promising companies to come public. But are the red-hot SPACs in this market still worth considering? You'll hate me at the end of that piece. And B&G Foods said sales soared during the pandemic. But can the move continue? I'm going to talk with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
How do you value a stock like Zoom Video, which reported one of the biggest upside surprises I've ever seen in my entire life last night? Zoom's got 169% revenue growth, and they beat their own guidance by 64%. How do you put a price on a company that raised its full-year revenue forecast from $910 million to $1.79 billion? Instead of 46% growth year over year, they've got 187% growth. This is a company that was supposed to earn 11 cents a share. Instead, it earned 44 cents, forced the analysts to raise their annual earnings estimates from 45 cents up to $1.13. I know the stock already had a monster run going into the quarter, but after these numbers, I have to say, I know what it's worth. It's worth more than it was the day before, and more than it was today, and be more than worth it is tomorrow. In other words, it's worth a heck of a lot more than it's trading for. No wonder the stock soared 7.6% today, and you got to hope the stock goes down so you can get in. I just don't know if it will. Zoom Video is one of these companies whose time has come. In a few months, it's gone from 20 million users to 300 million users. Boatloads of people and businesses are paying up for its special products. It's incredibly easy to set up. And now the whole analyst community is struggling with how to value the darn stock. On the one hand, this may be the best quarter we've ever seen from an enterprise software company. On the other hand, Zoom got a huge boost from COVID-19 and the shelter-in-place orders. So some analysts are indeed worried about what comes next as the economy reopens. I think this is no longer about the pandemic, though. Even though Zoom Video is now worth $63 billion, with a stock that's more than tripled for the year, that's because the company has taken over the world in just a couple of months. It's got a beloved product. You know it's big because Zoom is already a verb like Google. So I think the stock has more room to run. It was almost surreal listening to the analysts talk about Zoom's rise as a preamble to their questions on last night's conference call. Here's Patrick Wall-Ravens from JMP, quote, "So Eric," and that's Eric Yuan, the CEO, "you started as an enterprise company, but now so many individuals are using Zoom to connect with their friends and families and classmates. When I go to say goodnight to my daughter at night, I get a lot of, 'Daddy, I'm talking to my friends, come back later,' end quote." This is actually on a conference call. You expect these people to be a lot more jaded and cynical. Here's another one from Ryan McWilliams at Stevens Inc. He explains, quote, "I just attended a Zoom wedding last month, and it went great. And my own wedding in September might be over Zoom. So I just want to say thank you for a backup plan," end quote. And then there's the hard-bitten Heather Bellini from Goldman Sachs, who starts off by saying, "Look, I just wanted to say, first of all, thank you for the company and with your steering, acting the way it did over the last few months, which has been just such a trying time for so many. But not only, obviously, did you enable all of us to stay in touch and working, but just being able to still connect with friends, with family and friends. So thank you. I think on behalf of everybody," end quote. Holy cow, on a conference call. Yuan's remarkably modest about this stuff. He gives credit to a whole host of companies, from Amazon Web Services to Oracle to Atlassian, Equinox, HubSpot, Okta, PagerDuty, SurveyMonkey. He didn't even have a bad word to say about RingCentral, which is trying to move into this business, nor Slack, nor Microsoft. Plenty of TAM, total addressable market, to go around. That's why when I ask where Zoom can go, my answer is higher. And when pressed, my answer is higher still. Stay with Cramer, and don't miss tonight's special at 7 p.m. Eastern. You know who it's with? It's with my friend Scott Wapner.
Tonight at 7 p.m., Crisis in America. There's a scarcity of black leadership in technology. One CEO who made it talks about what needs to change in Silicon Valley. Plus, the head of the Nevada Gaming Control on the high stakes at tomorrow's reopening of Las Vegas casinos. And race relations and sports. All tonight at 7 p.m. with Scott Wapner.
Even on a day where the Awaken America stocks roared and most of the COVID winners sat on the sidelines, some of the work-from-home plays managed to pole vault to new highs. That's right. We'll take one that's been my favorite since it came out of the chute. It's called CrowdStrike. It's a cloud-based cybersecurity company that's reported an incredible quarter last night. Big top-line beat and a surprise profit. Plus, management gave strong guidance for the current quarter and raised their full-year earnings forecast. Most people won't even give you a forecast anymore. No wonder the stock shot up 6.3% today, briefly hitting a new all-time high of $103.80 before pulling back to 98 bucks. I've said over and over again that CrowdStrike is exactly the kind of cloud-based security play that you'd expect to thrive in an environment where millions of people have been forced to work from home. But even I didn't expect the quarter to be this good. So don't take it from me. Let's see him with George Kurtz. He's the co-founder and CEO of CrowdStrike to learn more about the quarter and the company's prospects. Mr. Kurtz, welcome back to Mad Money.
Thank you, Jim. Always a pleasure to be here.
Oh, thank you, George. You have a great provocative line in your conference call where you say the COVID-19 pandemic has created a breeding ground for cybercrime. Why is that?
Well, typically what we've seen in the past when folks are not at work is when cybercrime actually happens, right? And in this particular case, everyone was out of the office, everyone was working remotely, and they're not protected by those corporate firewalls and those systems. And it's one of those areas where the bad guys are taking advantage of a global pandemic. Anyone will click on a link related to COVID. And with ransomware as a service so hot, there's so much money to be made, it's no surprise that cybercrime is up big time.
All right, so let's understand that. Ransomware means you're going to have to pay somebody off. I always want to know, who the heck is it? I mean, is it a state? Is it guys who are really smart and are just really bad bank robber types? Who knows how to do this stuff?
Well, there's actually criminal enterprises that are set up like corporations. They have HR departments. They have multilingual support. And in fact, they even have a rev share model. There's one very prolific group that has a 20% rev share model. They'll actually give you the ransomware platform. And if you're good and you make money, it's a 20% rev share.
George, that's just ridiculous. That's more organized than organized crime. And you've managed to be able to, what, if you bust him, you go to the equivalent of the FBI? How do you stop someone that good?
Well, that's part of our solution, and that's what Falcon was built for, to not only stop nation-state attacks, but to also stop ransomware. And ransomware is really moved into an area where it impacts the resiliency of a business. We've seen some really big businesses that are not CrowdStrike customers that actually got impacted to the tunes of tens of millions of dollars and brought the business down to its knees. So part of our solution at CrowdStrike is leveraging our AI architecture to be able to identify never seen before attacks and be able to prevent those attacks from actually taking place.
You've got a slide in one of your presentations that AI, just so people know, the more you use it, the smarter it gets. How come that's the case?
Well, the more data that you consume, the greater the efficacy is. So the greater the prevention rates you can achieve. Now, it's not all that hard to get great prevention. What's really hard is to get great prevention and low false positive rates, which is why we consume so much data, just one element of our platform. So the more we consume, the smarter it gets, the better the outcome, and the lower the false positive rates.
Okay, so let's say I'm a bad guy, and I want to go after a semiconductor chip manufacturer with an expansion into a major U.S. airline. What am I trying to get at, and what does CrowdStrike stop?
Well, from a nation-state perspective, there's many valuable pieces of information that any of those companies have, specifically related to intellectual property. So chip manufacturing, think about 5G, how valuable that is, right? What are the latest plans? How can another nation gain a competitive advantage? When we think about airlines, what are the movements of people? Where are they going? And how do you tie that back to potential government intelligence agencies and their movements? And then when you think about COVID-19, there's nothing that is more valuable than the formula to cure COVID-19, right? Or the vaccine or the therapeutic drug that someone can come out with. So those are all hot topics. And I can tell you that the pharma industry is very concerned about these sort of attacks. And, again, that's why we've seen attacks dramatically rise just over the last 3 months.
George, we've heard the White House say that they are trying to steal our vaccines and they are trying to steal our 5G information. This must be stuff that CrowdStrike uncovered.
Well, we've stopped many breaches. Last year, 35,000 in-process breaches. And that's not malware. That's actually hands-on keyboard where had we not been there, there would have been a breach condition at a customer. So that's incredibly valuable to our customers. And not only is that valuable, but with the single agent architecture of our platform, it's being able to replace many other agent-based security products in their environment, which really drives tremendous return on investment for the purchase of CrowdStrike technology.
All right, well, let's talk about the return on investment. I'm sure there's some people today who are saying, look, they're starting to go back to restaurants. They're starting to go out. They're starting to do things and not staying at home. I think that the gains in CrowdStrike are unsustainable because work from home will no longer be the best way to do things. What do you say? How do you respond to people who say that work from home peaked yesterday?
Well, I can tell you what I do know, and I do know for sure we're not going to go back to the same way things were done before COVID-19. Now, what the future holds, obviously anybody's guess, but I'll give you my view. I think it will be a hybrid environment. You're going to have some folks go back to work, you're going to have split shifts, but I don't call it work from home, I call it work from anywhere, and that's a movement.
Great.
And really, that's a subset of digital transformation. And digital transformation is not a one-time hit, it's a very sustainable trend. I'll give you an example, Jim. As part of our 100 by 100, we met with 100 customers in 100 days, and I talked to a CIO, and as part of that process, I said, tell me about your digital transformation roadmap. And he said, we had a 2-year roadmap that we executed in one night in March, in one night. So that's a sustainable trend. That's not a one-time hit, Jim.
Well, look, I totally agree with you. I've taken some heat from some other people in the industry by saying that CrowdStrike's the worst to bet on. But it's because of the work you've done, George. You're really remarkable. And I do think when you put yourself up there with that chart, Salesforce, ServiceNow, Workday, it is deserving that CrowdStrike, because you were not born yesterday. You've been around for 9 years. And I think that you've done a terrific job. There's much more mad money ahead. Social distancing has benefited the owner of brands such as Green Giant and Ortega. But can the surge in sales of B&G Foods continue? I've got the CEO. Then I've always had the best ideas from you, Cramerica. I'm answering your questions on a real hot one. Vecto IQ that exploded. And I'm telling you what it says about the market, not just the stock. And all your calls, rapid fire, in tonight's edition of the Lightning Round. So stay with Cramer. How powerful is this rotation out of the safety stocks and into the Awaken America plays. Look at B&G Foods, which is a house of packaged food brands that you might recognize as Cream of Wheat, Ortega, Polliner, Vermont Made, B&M Beans, B&G Pickles, Pirates Booty, or Green Giant canned and frozen vegetables. This is a stock that's been on fire for months as part of the COVID-19 stockpiling trade. Then B&G announced some incredible May sales numbers this morning with 50% plus revenue growth year over year. And they guided for much higher than expected numbers in the whole second quarter. Yet what happens after rallying this morning? The stock actually closed down 1 cent today. Hey, that's the rotation speaking. But does it really make sense to sell after such astonishing numbers and with a big yield? Let's take a closer look with Ken Romanzi. He's the president and CEO of B&G Foods to get some more color on how his business is doing and where it's headed. Mr. Romanzi, welcome to Mad Money.
Jim, thanks so much. It's such a pleasure to be here. I'm a big fan.
Oh, thank you, Ken. Okay, so you had an incredible period. You basically pre-announced today, and you had the best single March, last week of March in history?
It was a record sales week for us. It came after the last half of March of generating 90% consumption increases in the last few weeks of March versus the prior year. And it really has continued, not quite at 90%, but over the last 11 weeks, our consumption as measured by Nielsen's up 50% versus prior year.
Okay.
And as you can see, it's continuing into the second quarter with the first 2 months off to a great start at plus 57%. So our portfolio is just responding very well and right there for consumers as they're cooking and eating more at home.
All right, so Ken, we got to figure out how much is sustainable. People just decided, you know what, it's fun to be at home. How much is, you know what, I'm looking at these new Green Giant products like the cauliflower, which is quite delicious, and I want to pivot to those. And how much of it might go away just because it is fun to have a night out?
Well, first of all, we don't expect 60% growth numbers to continue forever. But we do look to the industry experts that are talking about how fast will consumers go back to restaurants. What I would say was, as long as people are going to be eating out a little less, as long as people are going to be staying home a little bit more and working from home, our portfolio is perfect, from Green Giant vegetables to breakfast more at home. The more people are at home, they're eating more at breakfast. So our Cream of Wheat hot cereal and our McCann's Irish oatmeal are still growing, even as we entered the warm spring and summer months, are still growing at 30 and 40%. So as long as people are going to eat out a little less and work at home a little bit more, we believe there'll be better post-COVID trends than there were trends coming into the COVID crisis.
Okay, so Ken, when I was reading the verbiage, some of the stories ahead of what happened with the pandemic, there were some people who were questioning whether you could maintain that large dividend. Had you not had this spurt, would it have been under consideration that maybe the dividend had to be cut?
Jim, we, as you know, this company was built to grow through accretive acquisitions of high margin, good cash flow brands and use a significant amount of that cash flow to return to shareholders. So management and the board, and as I became CEO, believe you me, the board made sure I was totally committed to the company's strategy of paying a significant portion of our free cash flow out in dividends. So while we ran in a little tightness last year because of working capital investments, we had a plan to both not just more than cover our dividend, but also begin to chip away at our leverage level because we got a little higher than what most people were comfortable with.
Yeah, well, you know, it's interesting. As you said, I studied the company for a long time. And the Green Giant acquisition I always thought was a steal. But what's happened with these lines extensions that you've done, and I know you're going to do more frozen, maybe keep canned, but it can be such a dominant brand. I wonder whether you need so many of the other brands. Do they take up too much of your, let's say, mental time?
Well, you know, that's a question that people have been asking me ever since I arrived at B&G. And, you know, we have a great stable of steady Eddie brands that are such consistent performers and generate a lot of cash flow. So we don't see many of them distracting us. And, you know, we're a serial acquirer. We don't have hang out the for sale sign all that much. But Green Giant now is a significant portion of our business, a third of our business, and it's our largest brand. And we plan on it to continue to be our fastest growing brand. And as you can see, these new products, and you know, we love cauliflower. We think it's the magic ingredient. we're line extending and offering new products, not just to reinvent frozen vegetables, but to take plant-based vegetable forward products and go after carb replacement. So our veggie rice and our cauliflower tots, and now our new veggie hash brown and cauliflower gnocchi and pizza crust. These are all not just new vegetable products, but new products made from vegetables. And we're very excited about that pipeline. Hats off to B&G. I wasn't here when they did it. When they reawakened Green Giant in the fall of 2016 and launched those new products, those first new products since 2016 have cumulatively delivered over $500 million in retail sales. And that's just the first three segments. So our innovation pipeline, as far as the eye can see, is something we're very excited about. And the Green Giant brand can really carry it off.
Now, some of them, I mean, I happen to love the old London because I was growing up and that's what my mom served. And I love all the different flatbreads that you have. But I thought that this Back to Nature was very much in keeping with what I'm seeing with Beyond Meat. So you've got whole ends of the supermarket now that you have a good placement in.
You know, Jim, we're actually in over 80% of households, at least one B&G brand. We are in actually every food aisle of the store, and actually one non-food aisle. We actually have Static Guard. That's our one non-food product. So we're in every aisle of the store. We're in a lot of households, and we're just beginning to scratch the surface of how we can cross-promote products. So, for instance, we'll be launching a line of Green Giant frozen vegetables made with Mrs. Dash inside. So you don't even have to add it on your own. So there's so much more we can do with this